Hello dear students, I hope you all are safe. And in last session, we seen this some provision regarding redemption of redeemable preference share capital as per the Companies Act, and some sort of provision from that we have some special points, right, that arise, right. So in last lecture, the special points we seen that I think approximately 4 points, right? And the fifth point is that, right, is the profit available for distribution of dividend, and which profit is not available for distribution of dividend which subject to address to the redemption of redeemable preference share capital, right, for the purpose of making payment to the preference shareholders, right. So these are the list of profit available for distribution of dividend. The purpose of which is transfer to capital redemption reserve account. Out of this all the items, right, these items affected or connected with the capital redemption reserve accounts, right, which is transfer, right, to CRR, and this item which is not transferred to CRR, right. Keep in mind one thing that again I repeat, this all item, which one is GR, that means general reserve funds, dividend equalization fund, that means that this fund will be utilized for distribution of dividend, right. This fund is utilized by company for the purpose of dividend distribution, right, to the shareholders. Then insurance fund, right. Then the workers compensation fund and workers accident fund, right. Then profit and loss account, which is credit balance, right. See this all these item, this very much helpful while you will create the capital redemption reserve, right, which is special reserves, right, and which is not transferable, right. But this profit available for distribution, these all the items which is transferred to capital redemption reserve account, right, not from capital redemption reserve account. And the one major provision is that the amount of general reserves, right, transfer from CRR also, right. Then which item is not available for the which profit is not available for the distribution. So share premium account, right, or you can say the security premium account. This is not transferred to CRR account, right, but the amount of share premium, equity share premium, or if there is a fresh issue of shares, right, and its premium is there, suppose, right, so this amount will be utilized for the making payment to the preference shareholder while company redeem the different classes of preference share capital, right. Then the forfeited shares, right, which are not paid by the shareholder to the company within time moment, right. Then profit prior to incorporation, એનો મતલબ એમ થાય કે જ્યારે if the company is being formed, right, company is being formed, and at that time the some sort of amount of profit, right, which is not transferred to the CRR, right. And one more thing is that capital reserve, and there is a difference between reserve capital and capital reserve, right. So these are the items which is transferred to CRR and which item is not transferred to CRR, right. See, the CRR, the basic concept of CRR we will later on again, right. Now you are creating the CRR account, right, with the help of the face value. We seen that the face value and the fresh issue of shares. See, generally the CRR account is directly supported with the face value of particular preference share capital, right? And if there is either new issue, right, new issue in that sense, that means fresh issue, so it has either preference share capital is there, right, and equity share capital is there, right? So now next is some journal entries for the fulfillment of complete accounting treatment of redemption of redeemable preference share capital, right? So in this chapter there are some journal entries to complete this entire given problem, then solution, right? So in this chapter you are required to prepare first of all the necessary calculation. This is the being a part of your answer, right? Then certain journal entries as per the transaction sheets, right, or you can say additional information sheet, right? And last but not least, the most important statement, which is balance sheet, right? And we should prepare the balance sheet as per the Companies Act 2013 norms, right? So let me try to understand the one by one journal entries in the books of company, right? And one thing I am telling you guys that the accounts are prepared in the books of companies. So you just assume that we are like a company, right? So prepare the necessary ledgers and accounting treatment in the books of company, right? So first of all, the journal entries in the books of company XYZ company as on date. Here the journal entries in the books of XYZ company means whatever the name of company is given in the problem, right? And as on which dates, right? So date you should mention here, right? So let me try to understand that some journal entries of redemption of redeemable preference share capital, right, as per the certain provision of laws, right? First of all, see, journal entry you should try to understand, right? એને આપણે ગોખાવાનું નથી, સમજી ગયા? બરાબર? એને at least you just try to understand, right? Why this entry is needed, right? First of all, the word redemption, the company may think over that, right? The redemption, when the companies decide redemption, so what will be the journal entry? So first entry is being made. Likewise, right? See, the journal entries, if the shares are redeemed, right? પહેલા શું થશે? તમારા shares છે એ redeem કરવાના છે. Redeemed. બરાબર? એ આપણા ચેપ્ટરનું નામ શું છે? RPS. Redemption of redeemable preference shares. This is abbreviated form. Redemption of redeemable preference shares, right? Redeem કરવાના છે preference shares, right? તો પહેલા તો કંપની ડિસાઈડ કરે. When the companies decide to redeem the redeemable preference shares, right? At which value? Now the question arises with us. At which value the redemption of the preference shares is to be redeemed, right? First of all, right? So first entry is when it is decided to redeem preference shares. The first entry is always start when it is decided to redeem it, right? કંપની પહેલા શું એને ડિસાઈડ કરવું પડે કે પ્રેફરન્સ શેર્સ છે આપણે રીડીમ કરવાના છે, રાઈટ? તો એના માટે ફર્સ્ટ A entries, if the shares are to be redeemed at face value, shares are to be redeemed at face value, right? See, the first of all, the company think that when it is decided to redeem, right? Always the first entry starts from this, right? And if the information given like that, suppose the dividend, distribution of dividend, right? So the first entry start from dividend, preference dividend, right? So shares are to be redeemed at which value here? The face value, right? Face value. It means the without premium, without premium. So what does what will the pass the journal entries, right? What is the journal entries? Redemption of redeemable preference share capital account debited. In short, we can say that redemption of redeemable preference share capital account debited to preference share holder account, right? Debited. See, this is the first entry, right? So how do we remember that, right? The question is that, see, the redemption, you just try to remember, redemption is always debit, right? In first entry, right? So to whom parties to be made payment to them, right? Which party is here? The party's name is preference shareholder. It means our creditors in that sense, right? The preference shareholders, right? So first entry is redemption of redeemable preference share capital account debited to preference shareholder account. At which value here? Suppose company redeemed 2000 shares having face value rupees 100. So here the amount is 2 lakhs. Amount is 2 lakhs. For an example, here the 2000 number of preference shares suppose redeemed, right? And face value rupees, each of rupees 100, right? There is no amount of premium, right? It means there is face value. And if the company decide to redeem the redemption of redeemable preference share at face value, so simply number of shares multiplied by given face value, and the amount is there 2 lakhs rupees, right? One more thing is that 1B, if shares are to be redeemed at a premium. So you see that here the face value and here the premium, right? While you passing the journal entries, right, you should write the common entry face value with face value, right? RPS debit, it means the redemption of redeemable preference share capital account debit to preference share holder account, right? The same entry you should shown here in case of the when company decide the redemption at a premium, right? At a premium. Simply you just put here in debit side the premium on RPS account debit. Now the entry is being made that when the company's shares are redeemed at a premium, right? So this is face value, right? Now RPS account debit premium on RPS account also debit, and to same preference share holder account, right? If now suppose the information given like that, which information? See, the company redeemed 2000 preference shares, each of rupees 100 at a premium of 5%. right? So now the amount is changed, is become changed. If the company redeemed their preference share capital at a premium, right? So here the face value, and if the information given like that the shares are to be redeemed at a premium at the rate of 5%, right? So here 2 lakhs rupees, 2 lakhs rupees face value multiplied by 5%, so 10,000. So amount of premium is 10,000 and total preference share capital redeemed 2 lakhs 10,000, right? So you should write here in credit side 2 lakhs 10,000 instead of 2 lakhs. Why? Because of in that case the company shares are to be redeemed at premium, right? And this is the face value, right? Excluding the amount of premium, right? So the specification is given in your example, right? So you just read carefully. 2 lakhs plus 10,000 and 2 lakhs 10,000, right? And here the face value is 2 lakhs. Face value same 2 lakhs, right? And here the amount of premium is 10,000, right? So this is the journal entries regarding when the company decide to redeem, right? Company decide to redeem in both cases, face value and premium, right? And in example you have specification regarding the shares are to be redeemed at which value, right? So RPS here, the RPS debits to preference shareholder account. This is face value. If the shares are redeemed at premium, so premium account is there, and this premium. See, one concept you should remind that premium on RPS always debit. Why? Because of it is expense for the company. It is expense for the company, right? And it's a required the write-off at the end of the year, right? And this amount of premium on RPS, it is write-off against premium on RPS, write-off against which? Against, see, there is a balance of profit and loss, and which is always credit balance, right? There is a journal reserve, right? And before these two items, and if there is before this two balance, if there is a security premium is there, security premium, right? In the books of company it means all balance sheet, right? So the amount of premium on RPS write off against, first of all, we give the priority first to security premium amount, and if there is not given security premium amount in the books of company, right, then you use the profit and loss balances if there is that, right? And if it is not given even, right, last you can use the amount of GR for the purpose of write off premium on redemption of redeemable preference shares, right? Why? Because of it is expense. Always the premium on RPS, it is always expense for the company. Why? Because of the payment made to preference shareholders with the amount of premium if the specification is given, right? And if the such specification is not given, then we assume that the redemption of redeemable preference share capital are to be redeemed at that face value, right? So this is the redemption entries. Two entries. Then next, third one is second, making provision for making provision in that sense that if the once a company redeemed their redemption of redeemable preference shares, right? Is it the company having the amount of sources or not, right, for the making payment to the preference shareholders. કંપની પાસે અવેલેબલ સોર્સિસ છે કે કેમ? બરાબર, કંપની પાસે એટલું પ્રોવિઝન છે કે જે પ્રેફરન્સ શેરહોલ્ડરને પેમેન્ટ કરી શકાય. બરાબર, એની એન્ટ્રી છે. બરાબર, તો એના માટે શું શું યુઝ કરી શકાય જનરલી, રાઈટ? સો provision of amount for redemption of preferences right, any entry છે. તો એની અંદર પણ બે, first A, which one is if shares are to be redeemed out of distributed profit अथवा तो distribution profit. See, in last before a few minutes ago, right, the profit which are available for distribution of dividend, right? See, there are the list of items or things, right? I told you that. So which amount is used for profit available for distribution? In that set, it means another means that making provision of amount for redemption of preference shares. Why? Because of why this entry is being here. Why this entry is come, right? For that purpose only. See, for the purpose of that, the making payment to the preference shareholders, right? If you see, you just tell me that if you have a certain surplus, right, for making payment, right? There are some creditors of your company, right? See, you should make payment to them, right? Which balance out of you can payment, right? તમારી પાસે બેલેન્સ હોવી જોઈએ ને, તો તમે કઈ રીતના એ પેમેન્ટ કરી શકો? બરાબર, તો અહીંયા એનો મતલબ એવો જ થાય છે કે કંપની પ્રેફરન્સ શેરહોલ્ડરને પેમેન્ટ કરવા માટે એની પાસે પ્રોવિઝન, એની પાસે અવેલેબલ સોર્સિસ હોવા જોઈએ, right? So which one is that? See, the profit available for distribution, and in that list, right, and this all the list which is transferred to the capital redemption reserve and it is created, right? So if the shares are to be redeemed out of distributable profits, એટલે profit માંથી payment થાય તો profit and loss account is always debited to which account is here credited? To capital redemption reserve account credited, right? કા શું કામ? તો કે તમે શેમાંથી પેમેન્ટ કરશો પ્રેફરન્સ શેરહોલ્ડરને? તો કે પ્રોફિટમાં. Profit in that sense, you have already created the profit and loss account, right? It means the profit and loss account. It means the profit falling down, right? If you are making payments to your creditors, and creditors here assume that the preference shareholders, right? So once you make payment out of profit, right, then your amount of profit falling down, and to which account you credited here? The capital redemption reserve account. And always the certain provision is there, right, and this provision always transferred to the capital redemption reserve account, right, in case of redemption of redeemable preference share capital, right? Then the second B, 2B, if the shares are redeemed, if shares are to be redeemed out of issuing new shares, Here the new entries is regarding if the shares are to be redeemed out of new issue shares, right? First of all, the company issue new shares. It can be either face value, right? It can be either face value and it can be premium, which is seen that we seen that in case of redemption, when the company decide to redeem the shares, at which value company decide to redeem their shares, right? First of all face value, and second one thing is that premium. So same case happen in the issue of new shares. It means fresh issue, right? So first of all, in that first A in Roman, right? See, if new shares are issued at face value. So if the issue of new shares, that means the monies come to the business, and if the flow of monies come to the business, right, and always the bank account will be always debited, right? So here the bank account debited to which shares is issued. It means the share capital account, right? Either equity share capital is there, preference share capital is there. What can be given in example, right? See, the issue of shares, that means that you have got the amount from your shareholders, right? And always you just receive your money, finance via bank. So that's why the bank account is debit to share capital account, right? Then another new thing is that, see, second, if new shares are to be issued at a premium. This is the face value, this is the premium, right? If face value is there, then there should be excluding premium. એમાં premium હશે જ નહીં, right? Premium થી issue કરશે, premium થી redeem કરશે, તો એની અંદર premium હશે, right? So again bank account debit, the same entry will be passed, right? Simple, you just add the premium, right? You studied in 12th standard in a share moody chapter, right? Bank account debit, it means the bank khate udar the equity share arji and like so on, right? So bank account debit to share capital account, and one more thing is that to share premium, security premium account, right? Here the amounts. See, this is only the amount of premium, right? The same thing is that here bank account debit to share capital account, which is new issue of shares at face value of premium ન હોય, બરાબર? પ્રીમિયમ થી ઇશ્યુ કરે કંપની ન્યૂ શેર્સ, એની અંદર પ્રીમિયમ હશે, આ સિક્યુરિટી. One point is that the question rises with us that I think you just said that sir please one question is that, and the question it can be related to the redemption of preference shares premium. It means the premium on redemption of share capital account debited, right? Emma debit thatu. Here the security premium account is created. Why it happened, right? The I am telling you that see, the redemption of preference shares, right? That make for the purpose of making payment to preference shareholders, right? So there may be redemption of redeemable preference share capital redeemed with the premium it can be, right? So the total amount of that paid to the preference shareholders, right? That's why the premium account is expense, and it, at the end of year, that is carry forward or write off against the profit and loss account. And if the security premium amount is given, right, then the write off should be against the security premium account, right? Otherwise, it is not there, then write off against profit and loss account. So that's why we will debited this premium on RPS, always debit side in a profit and loss statement, right? Then here the security premium account. Why? Because of the company issue shares, right? So company received the money from their shareholders after issuing such equity share capital or preference share capital, right? So here the company received money, right, through the bank with the amount of premium. That's why here the security premium account is credited, right? And the remaining entries, I hope that you understood these journal entries regarding RPS. And if you have any query, please contact me, or you can free to message to me on my WhatsApp number, right? So we just wind up this session, right? So you just practice this journal entries, right? You just read carefully. You just you can understand that how the journal entries will come and how the amount of will push, right? And while we will going to practical example, right? You can easily understand it, right? So dhanyawad. We will see later on for remaining journal entries. Thank you. Dhanyawad.